Mr. Love will shortly join us. We move on to the next speaker. May I invite Mr. Abhishek Bansal, founder and chairman, Ebans Holdings, to please come up on stage. Round of applause for Mr. Abhishek, please. Next up on the panel, we have Mr. Rishi Nathani, Chief Business Officer, Multi-Commodity Exchange of India Limited, MCX. Thank you, sir, for joining us. Next on the panel is Mr. Pranay Agarwal, Director and CEO, StockScart, discount broker arms of SMC Global Securities Limited. Thank you, Mr. Pranay, for joining us. Last but not the least on the panel is Mr. Mayank Joshipura, Associate Dean, School of Business Management, NMIMS. Thank you, Mr. Mayank, for joining us. All of you all who are already inside, I request all of you all to please be seated. So I think we're ready to begin with the session. Audience, I request you to kindly join us as soon as possible. This is the panel discussion number 1, Role of Disruptive Technologies for a Future-Ready Financial Market, Innovation, Inclusion and Sustainability. This session will cover issues on trends and opportunities, data and technology for new age market challenges, technological disruptions and future direction, how to take the market to the next level, enhancing retail participation, creating a larger pool of informed investors, globalization and integration of Indian capital market. I request our moderator, Ms. Nasreen Sultana, to please start the session. Thank you.
Hello everyone, and welcome to this session where we are going to talk and discuss about how technology has changed the landscape of stock broking and the brokerage industry. As in the last 4 years we have seen a different phase of the market altogether. But before we get into the conversation with my panelists, let me tell you a story. Lakshmi Yadav from Jadavpur, she moved to a sprawling bungalow in Kolkata in just 2 years of trading. Her profits, of course, bounced to many digits, and all of this because she was trading in the stock markets, and she got stuck to the stock markets habit of buying and trading stocks right after the pandemic. Of course, I don't know who Leena Yadav is, and I'm making up the story. But there are so many Leena Yadavs in India who went on the stock markets trading trend, and they just got stuck to it. And all of this is because India moved to a different mode of stock market trading, and that was enhanced by the technology advance that we had. The regulations obviously helped in getting these people on the stock markets platform. This is generally what is called as financializations of the stock markets or the savings in India. I would like to throw open this question to my panelists to take me through how the technology has changed the face of stock markets in India, and especially now because we are actually maturing in terms of our... We just joined by Mr. Chaturvedi. So we were talking about how financialization actually has taken a new shape in India, and all thanks to technology, and how the regulation and the regulator has also been up on its feet to get this market up and running, even during a lockdown where nobody was even allowed to step out of their house. So I am throwing this question open to all the panelists. Take us through how this technology advancement really changed the landscape and the challenges, of course, because there is a security threat. Mr. Joshipura, you want to take that?
So I don't know whether technology leads to security threat, but if we see the evolution, the way, because we are talking about 2047 now, it's very important to see how things change. Let's say, from 1999, first time we got this rolling settlement and demat sort of thing, and we are almost quarter century sort of further to that. And what we have seen is something phenomenal. I mean, what this open outcry system we had, so I believe we were more prone to security issues then rather than what we are now. For instance, let me give you a couple of examples. We had those challenges of fake certificates and forged signatures. I don't know whether the stock certificate which I am getting from a seller is a genuine one. Then I send it to company, it takes 2 months for transfer, and then I get to know that the certificate was fake. There were challenges in terms of whether my broker is executing my trade at the best price available at that point of time or the worst price. And the brokerage rates were 2%, 3%, right? So poor service and high fees. Since then, what we have seen is we do everything on our fingertips. Each order has order ID, a corresponding transaction or a trade ID. So it's absolutely safe in that sense. There are further issues in terms of technical glitches that we see on exchanges which frequently occur. We have other challenges in terms of too many intermediaries, notwithstanding it's T+1, T+2, but the way it happens right now in terms of post-trade settlement, I mean, you have like custodians and depositories and banks and so many players involved and everything moves. You have short delivery challenges right now. Going forward, the way I see it, since we are talking about next 25 years, if we keep 2047 into consideration, and interestingly, blockchain has recently, also the World Bank has recently issued $100 billion, or Euro bond through Euroclear, and it's listed on Luxembourg Stock Exchange. It's entirely issued on blockchain. Blockchain allows you to issue securities in no time. It allows you to fractionalize it. So this whole nonsense thing in my view of the stock split which we talk about, I don't know, I mean, why anyone should even do that when we have fractionalized securities available. Blockchain allows you to do those kind of things. So what internet trading and this online screen-based trading did to open outcry system, going forward we'll see that blockchain will do that to sort of our existing trading mechanism that we have in a post-trade settlement. I'll talk a little more once everyone gives opening remarks, but this is something which I believe is that leaving those odd instances, I believe the risk, non-price risk I would say, was much, much higher in 1990s compared to what we have now, and it's much more transparent than what we had. Yes, newer technologies will help us making it more transparent, safe and robust, but we can't compare what we had earlier.
Right. A lot of complex mechanisms that we have been dealing with, and of course we are evolving. But before we get into further into the mechanisms and the complexities of that, let us ask Mr. Chaturvedi about the new retail participation. We have seen the rise of retail participation, and it's no-brainer now because demat accounts have been rising. Even in the mutual fund industry, the new SIP money has been flowing in. But there is a risk with retail investors blankly and blindly following tips on technology, maybe like a WhatsApp or a social media. How do you really put that curve? Because somewhere retail investors are also threatened or maybe gullible.
Yeah, thanks. That's a very pertinent question. The reason being, one reason being that, as I said in my earlier session also, that it is the retail participation which is key for us to do anything and to go anywhere with our aspirations with regard to capital market. Second, also retail need to participate in the growth story that we all talk about. We did speak about moving from mean to median. That means that there should be more, the growth should be more inclusive, we have to address the disparity, and all these disparities which are currently there, and the participation which we also heard about how 90% of retail end up making losses. One data I want to share, very interesting, while we are embarking upon a very exciting journey, our savings rate, the financial savings rate of the country has been half from what it used to be pre-pandemic. It used to be around 11.5%. It has come to 5% or so. Now, tell me, without financial savings, which capital formation and which retail participation will happen? And if that has turned to half, that means there must be some reason for that. One of the reason has been the trust, as we discussed in the previous session. So, obviously we have long way to go. It's not that savings rate are very low, it's just that the savings in financial products are relatively low because of the house, because of the real estate, because of the gold and the other avenues which are out there. However, the financial savings is the one that actually contributes to the capital formation to the largest extent. So from that perspective, I would keep it very brief, but there are 3-4 things that it's very simple, because what is retail, and I'm a very strong proponent of the retail participation, because as I was saying that FPI funds goes, it comes and goes, the retail sticks and take us to a sustainable level. Trust definitely is one of the key thing. Second, we need to make it very affordable. It cannot be only for the privileged few. It has to be a relevant ticket size and a very affordable pricing. It should have the accessibility. There should be the awareness. People should be aware about it, and it should be attractive. It should have the excitement for people to move from out of the FD and take some of the risk, and if they are aware of it. These are very basic constituents for any retail participation, and technology, innovation, and all the tools that got mentioned obviously helps retail to, because now it is more decentralized, they hopefully can trust it more and then participate more. But still, it boils down to, from the capital market perspective, how we get more and more retail participating, not just in the derivatives, but on the other asset classes. And this percentage penetration of the financial savings have to increase significantly for us to achieve our goals and the capital formation. Yep, thank you.
Right. As you rightly said, buying and selling stocks has become as easy as buying your grocery or your food, or like you do on your app, and that obviously has increased the complexities of it. I have with me Pranay. Could you take me through the issues that you face technologically when you are onboarding a client or somebody who's not able to understand, well, that person is getting on the platform?
I think 10 years back, if you would have asked me this question, I would have answered very differently, because the processes back then, like having the physical document, going for a signature, like, we used to ask clients to basically download the form, fill it up, sign and scan it back to us, and, like, then post it. So all these processes, there would be no internet-based broking like us, if those would have still, persist. But we are moving rapidly. Talk about now it's like 5 minutes. You can onboard a client. Then basically, the onboarding a client is as easy as signing in for a Google account. So that kind of advancement has already been done. And 5 years down the line, I think there would be much more to go. And if you talk about the challenges on the tech side, like with the advent of startup world, as you talked about, like, tech has become an expensive affair. So right now, the human capital is very expensive in tech. So all these, they don't come cheap, and similarly, the compliances have increased. When the tech increases, the compliances have increased. New, even, the new policies are coming up, because every day the tech is evolving, and similarly, we have to evolve the policies surrounding it. We don't want, when we talk about all these AI-based advisories, so we don't want some small group of traders making this AI software and manipulating the markets and to gain substantial profits. So all these things are happening somewhere right now. So similarly, there will be a lot of increase in compliances. There will be a lot of increase in technology cost for all the brokers out there, for all the traders out there. And there will be a race going on for to adopt the new technologies among the brokers. Even currently, there is a race among the brokers to have all these buzzwords out there: robo-based advisory, AI advisory. So all these buzzwords are out there, and the brokers want to create more and more products for their clients. Apart from your initial question was onboarding the client, but I'm also talking about the trading journey. So in that, the brokers are going for more and more costs. They are acquiring human capital, and you will see more and more of these things coming.
As you mentioned about lot of intervention of technology, what is happening in the commodity space? If I can ask Mr. Nathani to give us some perspective in the commodity space, because it is again very complicated. We have futures also there in the commodity space. So how are you tackling the complexions there?
Well, I believe technology makes things simpler, not complex. And like you said, in commodity markets, commodity derivative markets or any other markets for that, whether it's currency, equity, etc. What you have seen is an explosion of participation. And why has that come across? Because technology is the great leveler. It has allowed financial inclusion. It has made the last mile person also get equal access to the markets as someone sitting in a large city. Now that is why you are seeing more and more people who feel that, yes, I have an equal level playing field and therefore I should also participate in this market. Second is technology has also enabled us to reach out and educate more people. So that is also one thing you have seen. And of course, whenever you use certain things, any tool, I mean, it's always safe to walk, but how far will you go? So you sit in a car. Now you say that, well, you could have an accident. Yes, but if you have the checks and balances, if you're wearing a seat belt, you're staying within the speed limit, you have a driving license, then similarly, if you use technology with all the checks and balances built in, I'm sure that you can leverage technology to grow these markets much larger. And in commodity markets in specific, when we talk about commodities or delivery in commodities, people say, oh, will I get a truck full of commodities at my doorstep? No. So technology has enabled dematerialization of warehouse receipts, what we call electronic warehouse receipts. And due to that, people can trade in commodities, take and give delivery in the electronic form.
Right. As we are talking about flying cars and AI and robo-advisory, the question is Indian market still ready for such kind of technology advancement in stock markets? Mr. Bansal, I want you to answer to that. Are we ready?
Yeah, so as my dear friend Pranay mentioned about, eKYC and all these technologies which have enabled larger retail participation, it's not a great technology if you see only as per technology per se. It's just that the regulator about a decade back got comfortable with that technology and allowed those kind of onboarding. Otherwise, we could have had the same technologies 2 decades back also. So, we could talk about AI, we could talk about generative AI, alternate data and all those technologies, but is the regulator comfortable? Are the exchanges comfortable? Are the market participants comfortable or geared up for such sort of technology is the larger question when it comes to capital markets. When you compare capital markets versus the development of technology, the technological application of the advancement of technology, I believe, is the lowest in the capital markets. Whereas if you see the technological advancement as a whole, because the entire ecosystem is not able to move at the same pace. And this ecosystem means to be the institutions, the regulator, and the exchanges. And then we talk about the retail participants, which is the last leg of the pyramid, who is the beneficiary of these advancements of technologies, and thus the participation increases. So in a way, we can say that only if the regulator and the larger market participants and institutions are ready for this technological advancement, that will then trickle down to the retail. The technology is already available. You can have the highest technology right now within 24 hours that can kick into the capital markets. But the regulator and the market participants like the institutions are not ready for it. As I mentioned with an example of the KYC. I am saying, why can't we have a retina scan KYC within 1 minute? We have such kind of technologies. But the exchanges and the regulators are not ready for such advancements. We can have financial inclusion very fast because of those things. But as we say, because these are, it involves a lot of monetary risk. It is not that, some Facebook goes bust, there wouldn't be monetary risk to the system. But here you could lead to a financial collapse, hurting the economy of a country, thereby creating issues of national concern. Thus, one has to weigh very wisely technology versus the impact of it in the market. If it goes wrong, and are we ready for it? We need to all ask that questions to ourselves. Are we moving too ahead of ourselves, and are we in pace with the regulator and the other market participants?
Right, quite a contra view on that. Mr. Chaturvedi, do you want to take that? Do you think we are going ahead of our time?
First thing, I don't know why did you pick me, but I don't know whether you read my mind. Yeah, proximity, or maybe my name. So actually, I do have a little different opinion from that. I do believe that we are one of the best capital market in the world. I do believe that we are. When I saw the chairperson of SEBI on TV saying that we may very soon, and very soon is like we're talking about 6 months to 12 months, go to a real-time settlement. Tell me how many countries are doing it in a 6 to 12 months. Again, Mrigank mentioned about where were we and where we are today. If you see, that is a revolution. And 4x multiplier of any wealth creation in the public sector is the highest magnitude. Now, I definitely have a view that, and I just mentioned before, just 2 minutes ago, that the financial inclusion is coming down. I don't think financial inclusion is, and financial savings is coming down. Sorry, not inclusion, financial savings is coming down. And I don't think that is because of lack of technology. It is because of various other factors where retail need to get involved as a trust, as a product, as a dissemination, as the awareness. I know we can go on and on. We have a hard stop of 12:30. We can take this offline if it comes to that.
I never said that India is behind. I never meant that. Just want to correct on that. India is far ahead in that. I just meant in a general sense.
Yeah, no, that's true. But I don't. Yeah, that's all I have. Yeah.
I'll just add to that. Just to limited point to what Abhishek said, technology is there. So you have Formula One cars. Do you let them run on the road? No, because there are other people also. So the comfort of the regulator or the exchanges or the entire ecosystem is not dependent on only technology, but the adoption of technology by the various market participants. And as people graduate more towards adoption of that technology, then you will allow better technology to be adopted. Otherwise, you have someone riding a bicycle and someone running a Formula One car, you're going to have an accident on that road, right?
Definitely. And as we're talking about adaptability, we have moved to T1 settlement, and that itself is an achievement because I think some of the most developed markets have not reached that there. Mr. Joshipura, I want you to respond to this. Are we ready, or what kind of adaptability do we require for this real-time settlement of our trades?
So let me cover a couple of additional points like I mentioned in the beginning. First is that somehow whenever we have this discussion around capital markets, we reach all the way down to stock market. That is not the relevant thing in that sense. I mean, the one beautiful thing that has happened is most assets, not only stocks or bonds, they are now available as financial assets. So you have silver ETF, you have gold bonds, and which means REITs. I can't, earn rental by renting a business park to some corporate entity. Now I can do that. So we need to appreciate that for an individual. If we really talk about retail, it's not that everyone should jump into stock market and derivatives and, it's like, are you able to sort of allocate funds based on your risk appetite and goal, and you have all asset classes available to invest in the most convenient way. And that is where we are moving towards, or we have already moved in that direction. The current system, we are one of the best, and look at the way fintech revolution has happened. So sometimes, rather than waiting for market participants to be ready, you throw that at them and they'll get ready. COVID made us ready for several other things. Now, why technology was available 10 years back, but we could not achieve several things like the growth of discount brokerage houses, etc., because the data was not available and cheap. Now, I can't do certain things if the data is not affordable. So there are certain enablers out there. So when we move into that direction, we need to consider what are the other areas where we need to grow beyond the settlement. Like I said, order matching is one of the best in our system, but we have extremely centralized market system, 2 depositories, 3 exchanges. There will be a time we have to move to a decentralized system, and it cannot be sequential. It goes to custodian first, then depository. We have blockchain-based systems, and often we feel that technology makes things riskier. In fact, they make things safer and more transparent. What happens in a blockchain-based post-trade settlement, for instance? I have a private key of my bank account and a demat account, for instance. You have it, you traded with me, I don't need anyone. As soon as I confirm the order or transaction, those transactions happen and everyone sees at the same time. So the regulator can see the transaction, and until and unless everyone confirms that from their perspective, whether there's sufficient margin, there are securities out there, there are funds out there, the transaction doesn't get executed in the first place. So speed increases, transparency increases, this compliance and audit issues disappears entirely. Now the challenge is there's a lot of cost of putting this in place. But why I'm emphasizing on this is, even in US, they are treating, or in developed world, they are treating this blockchain as incremental disruption. Not that you want to change everything. But when we talk about next 25 years, technology always surprises you. If we ourselves look back and say somewhere someone would have thought in year 2000 that we'll trade on mobile and we'll have this WhatsApp and all, I don't think anyone imagined even in the developed world those kind of things. So what we need to do is we need to make our entrepreneurs more able. We should have a crowdfunding platforms in a regulated setup. We will have at some sort of thing, like I mentioned, fractionalized assets. And we need, when we talk about robo-advisors, it's not like some robot is doing for us. It's the personalized service that is offered. There is a concept of mass customization. There is a concept of personal level customization. So based on my need and my risk appetite, my goals, I'll be offered the solution. So this cannot happen without support of technology and unbiased automated way of doing it. So this is sort of, I took a little longer, but I had to cover a few things from my beginning remarks.
Right. You mentioned about crowdfunding also. We'll come to that, and we'll open the floor for some questions. But before that, I want to come to Mr. Bansal. You've heard a lot of comments or commentaries which actually says, I mean, Mr. Joshipuri is very confident that there is going to be a new revolution as far as technology is concerned in the capital markets, be it in the way how we participate or how the technology actually makes the thing easier for us in terms of adaptability. What do you think about that?
There's no doubt or there's no dilemma in that the technological revolution will happen in capital markets. But the point is, I am saying that the technology is available tomorrow. When will it happen? That is the point to answer. I am saying we already have much advanced technologies and it has already been applied in advanced economies already. And India already has those systems and the ability to adapt. The regulator and the exchange and the market participants, are they ready, or they are ready? That is the question. I am not denying that. Already we took, like, when we have discount brokers, we are having these discount brokers in India in the last decade. These discount brokers were there in the US in the last 2-3 decades. We took almost a latency of 2 decades to reach there.
And a COVID.
And a COVID, yes. And a COVID to reach there. That is the more prominent question. We can hit that technology tomorrow within 24 hours. We have all that technologies, we have all those solutions, and we have test case history study of advanced economies also, as our fellow panelist is saying. But are all the market participants ready for it? That's the more important question.
So Pranay, are we ready?
To answer this question, I think he very rightly said that all the technology, when we talk about AI, ChatGPT is already there. I was asking ChatGPT to recommend me some stocks just to see what kind of stocks they recommend, and ChatGPT very politely refused that we cannot recommend any stocks. So I think that is a matter of that is something, some programming, maybe some compliance. NSE doesn't allow ChatGPT to recommend stocks in India, but there exist softwares in like BlackRock, for instance, has this software called Aladdin, and it is known to study thousands of data points and predict the market for them. So
But that's happening in the mutual fund industry with the predictive analysis called the funds. That hasn't happened in stock markets in the real-time trading, but probably we could be there sometime and we don't know.
that's happening in stock broking too. That even many brokers have this robo advisory out there, as I rightly said. But the thing is, it's not actual AI. It's somewhat some parameters we are setting. Some brokers are setting a parameter that whenever this data point is suppose below the line, then you recommend this stock. That's not a AI. AI is where there is a machine learning, where machine can recommend you something that machine can learn itself that whenever the market trend goes like this and RSI is saying
Yeah,
this.
the predictive
and
analysis.
So then they can predict the market, and it's not the parameters you set, that is algo. So that kind of softwares, I think whenever we are actually there in terms of technology, we are able to create, I think regulators will very much appreciate it. And as Mr. Bansalji rightly said, that regulators have to adopt it first, but I think the technology itself has to evolve a little more for us to accept it.
Right, before we wrap up this session, I want to open the floor for some questions. A lot of hands I can see.
Yeah, sir, please.
Sure.
So we have heard the views of the panelists this side and the other side. Younger generation here, more matured.
But it was not done intentionally.
You see, we are talking about the technology being ready, and tomorrow only in 24 hours we can put in. But let us understand and realize the realistic situation in our country. Even today, if you don't have the demat account of a client with you as a DP and a broker, it is difficult for you to sell his shares, because it takes a lot of time for him to give the slip to his DP, and that stock comes to you, even today in this age. So let us understand, where do we stand? Are we running? We should run after the technology, AI, and this, and what is happening?
Sir,
70% of my clients are still talking to the dealers for their trades, even today in this country. So what you are talking about is only some 25 lakhs or 50 lakhs people. What about others?
True, sir.
There will
I
be-
precisely.
No, let me complete. There will be a lot of accidents. So we have to understand what, like Rishi, Mr. Joshipura, and even Love said that yes, we are ready, we are capable of it. But it's not the regulator alone, it's the whole system. And most important is the creating awareness among the people, among the investors, and more awareness of the financial crime, prevention and detection. Unless we put both the things parallel, we will not succeed. So many crimes are happening. Cyber crime is just one of the part of the total financial crime space. We have to educate people. Even the most of the chartered accountants or big four people, they are also not aware of many of those tools which are available in the financial crime space to understand it. So let us, okay, we are ready, we are not behind now, but to put it in the practice, I think we should have our own limitation in mind, educate the people and create awareness. Thank you.
What I meant is, the markets were more riskier earlier than what they are now. For instance, now I know which is my order, whether the same order has been executed or not. I don't see that was happening at any point of time. Even this UPI transactions are as safe as what we see anywhere for that matter. So, I mean, if it's like technology always has this resistance. Once it comes in, it becomes the way of, like, I have like my Golgappa wala also takes payment in digital
On
world.
Just
I
let
don't
me
know what we would
just
have
comment
done.
one. But I precisely said the same thing, sir. I don't know, you got it differently. I precisely said the same thing, that the technology is there, but the participants are not
You
ready.
should be happy. He called you the younger Lord, boss. The old ones are sitting here.
We are really running short on time. We can
Nasreen,
catch offline on
Nasreen,
the side.
Nasreen,
Yes.
a few very important points on the theme of the summit, and I'm very happy. Savitri Parekh of Reliance is with me, and Mr. M. Narendra of Adani Enterprises, board member, is also here. Very three important points on the theme of the summit. My name is Manoj Alimchandani. I've been a panel speaker in many large conferences. Point number one, it is for India growth story. That is Amrut Kal 2047. And Nasreen, and I would like the views of the panel, particularly of a few stalwarts. Love Chaturvedi, you are also part of Reliance Group. And also Rishi, commodity markets, India growth story cannot happen. And also Mayank, Dr. Mayank, you can throw the wide perspective because you take care of the future generation and others also, finest. One point, litigation is affecting India growth story. I will give particular examples. Reliance Infra, Supreme Court cases on. Harish Salve, eminent chartered accountant, advocate, is fighting that case. 9,000 odd crores coming. In spite of 2 years ago, Anil Ambani mentioned officially in the annual general meeting, 1 crore penalty per day plus some 4,000 odd crores were there. How many years it has happened? How many years it will go on? Would money come? Will it not come? Money is guaranteed by a PSU, DMRC. Another, next story. Sony Z, 2 years have gone. 2 years. Litigation, NCLT has passed. FDI of over $1 billion, $1.5 billion impacted. Piyush Goyal is looking at FDI. He said 2 days ago, FDI shortfall for 23-24, not worry, next year. Targets are being missed, FDI has gone. Next is Hindenburg, everybody knows, planted articles, all fake articles impacting India growth story. And India Bulls housing finance case. India Bulls, PIL, going in for how many years? PIL, Enforcement Directorate. The High Court has ruled Enforcement Direct case is false. Madhu Kela has invested 1,200 crores this week in the market. The name will come, but quality people are buying. But what is the public perception? India
I would
growth
like
story
to
is
intervene
impacted.
here, sir.
Many more. I would like the views of the
Yes.
panel on each.
Yes.
And also audience can support. But this theme is very important,
Yes.
Viksit Bharat 2047. And thank you very much for giving me an opportunity.
Sure, and we will answer your queries. We have a separate forum, actually separate session on the legalities and the litigations. I request you to stay back and attend that session. Maybe your queries could be answered and responded there. We are very, very sorry. We have very limited time. One last remark maybe. I'm very sorry, we will not be able to take more questions. 30 seconds remarks from everybody, please. We are very, yes. Yes, please.
So I don't know what the question precisely was, but obviously
30 seconds, but
but obviously, yeah, India is very well positioned to be in the Amrit Kal, and all the best to all the market participants sitting out here and the market participants sitting out there. You know, because of you only this Amrit Kal is possible today. So all the best to all the market participants out here. Thank you.
what about you, Pranay?
I, for one instance, I'm always fascinated about how, the trading used to happen before 1990. All the, all the shop floor, soda used to happen.
Quick, you are young, you
So
need to
now-
speak faster.
I'm saying I'm really excited about the current situation, how we have evolved technologically, and what is the future situation. So I'm really excited, and I'm really
Well,
excited
you are the
to take
future. We will
participation.
rely on your technologies and the changes you bring in the capital markets. Yes. What about you, Mr. Maya?
So we are talking, remember, about next 25 years, and therefore what I believe is that eventually we'll have a mechanism where almost peer-to-peer settlement would happen, markets will become decentralized, entrepreneurs will get crowdfunding in several ways, fractionalized assets, and we'll have more products that meet all individual investors' requirements. Not about stock, you'll be able to come up with asset allocation of your choice based on your profile. That would be the real move towards financial freedom and financial
Game changer.
inclusion. That's
Right.
Yeah, I believe India is one of the most technologically advanced capital markets, and it will continue to be so going forward. And whatever growth we've seen in the last 20, 25 years in the market is just the beginning. And by 2047, I think we'll be number one capital in the world.
All right, last word by Mr. Chaturvedi.
Yeah, I would just like to summarize saying that don't limit your challenges. Go and challenge your limits, and we'll be there. All the best.
Right. Thank you so much for a really engaging conversation here. Thank you.
Thank you so much. Ladies and gentlemen, can we please put a huge round of applause for all our panelists here? I request all of y'all to please pose for a picture together. Thank you so much, all the panelists, and thank you for being such a great audience. Rest of the questions can be taken offline. Thank you so much for making this session so interactive.